All right, so 80% of this market, let me make sure it's recording. All right, it is. All right, so 80% of this market is psychological, guys, right? While 20% of the market is technical. Now, I want you guys to understand, like I was saying, the mental is a big part of trading. You can be a great trader, but you'll literally psych yourself out of trades every single time and kind of hold yourself back from reaching that level of trading that you want to be at. So guys, I want you to understand that the market is running off of two emotions, right? Two major emotions, and those are fear and greed, right? Fear of greed, fear of losing a trade, fear of missing out on a trade, fear of losing your money, fear of not being good, like just fear. And then greed, right? A lot of us, we're staying in trades for too long, right? We're over trading. We're trading too many times throughout the course of the day, too many times throughout the course of the week. Every single opportunity, we're just jumping in, jumping in, jumping in, jumping in. You may have already hit your trading goal for the week, but you got in on 6 more trades and lost it all, right? Because that's the mindset, right? The emotions. So how do we combat these emotions, right? How do we combat the fear? How do we combat the greed? Well, one of the major things that I seen that worked out for me on this aspect was figuring out what my trading system was going to be. See, guys, like I always say, system stands for save yourself time, energy, and money, right? So the stronger that your system is, right, the easier that trading will become for you. I want you guys to understand that the stronger your trading system is, the easier that trading will become for you. See, every time I trade, I look for the same things because I have developed the system in which I utilize every single time I'm looking at the market, right? I know what I want to look for. So, guys, there's a few things that you need to do when you're starting out, when you're starting to figure out your style of trading. The first thing you want to do is you want to find your style of trading, right? Find your style of trading. And have self-awareness. You want to understand the strengths and the weaknesses in your trader. So guys, there are 3 types of traders, right? And when I say find a style of trading, I mean, like, what do you want to do? Do you want to do break and retest? Do you want to learn smart money? Do you want to learn MA cross? Do you want to learn sensei? Or are you trying to learn supply and demand? You want to find a style of trading that you want. And guys, just to give you a great example of how to find that style of trading, go live. There is literally an array of educators that you can utilize that all have different trading styles and figure it out. Like, one of the major things I want you guys to do is when you're done with the academy, the next step is to now go live, right? Because you know support and resistance. You've learned about Elliott waves. You've learned about harmonics. You've learned about supply and demand. But now you want to go live and you want to figure out an educator, right, that has a style of trading that you like and you want to use and continuously tune into that educator and perfect that style, right? Now, like I said, strengths and weaknesses. Understand your strengths and weaknesses. In terms of that, do you trade better in the day? Do you trade better at night? Are you better at trading USD CAD than you are at Euro USD, right? What are your strengths? You want to focus on the strengths, right? And then boom, 3 types of traders. So you have swing traders, right? These are people where, you know, they're getting in a trade. They're looking for about 100 plus pips, right? You may be willing to hold a trade for a week or a month or months at a time. You may be willing to hold trades for long periods of time, right? And then you have scalpers. So these are people who are in and out. Maybe you don't want to hold trades over the weekend. Maybe you don't even want to hold trades for a day. Maybe you want to be in and out your trades 30 minutes, boom, I'm out, right? So these are scalpers. You're looking for maybe 15 to 30 pips a pop. Right now you have day traders. So these are people where, you know, you trade throughout the week. You may hold your trade for a few hours, maybe even a day. You're not necessarily holding the trades over the weekend, right? But, you know, you're looking anywhere from like 40 to like 80, 90 pips in that range, right? And these are like day traders. These are the ranges that you're looking for, right? So you want to figure out the type of trader that you are as well, the type of trader that you want to be that'll suit you best, right? That's a big thing in figuring out the trading system. Now, another key component, and guys, I can't stress this enough. See, I be hearing a lot of people and they be like, oh, I took this signal and it didn't go right. And I'd be like, did it hit stop loss? And they're like, nah, it didn't hit stop loss. So how did it take you out the trade? I don't know, bro. It just took me out because you're over leveraging. Or I'm like, did it hit stop loss? Why'd you get out? Because I was down because I already blew half my account. You're over leveraging. Right, guys, I want you to understand something. Even when I take signals, even when I trade on my own, I'm always utilizing risk management. I'm always practicing risk management, right? So always trade only 2 to 5% of your account per trade. That's one thing that you want to do. You never want to trade more than 5% of your account per trade. Because think about it like this. 5 goes into 100 20 times. That means that you would have to get 20 trades in a row wrong for you to blow your account if you were not trading any more than 5% of your account per trade, right? And I want you guys to understand this 2 to 5% will adjust whether or not your account goes down or whether or not your account goes up. So you always want to go 2 to 5% based off of the current price of your account, right? So now always have a 1 to 3 risk to reward ratio. So guys, I want you to understand something. If you're getting in on a trade, if the trade is looking to gain 60 pips or $60, let me use it in this terminology. If the trade is looking to gain $60, that means you shouldn't be risking any more than $20, right? Because that would then say I could lose this trade 2 times in a row, get it right on the 3rd time, make back the money that I lost on the 2 trades that I lost, and still make an additional $20. Right? So you always want to have at least a 1 to 3 risk to reward ratio or higher, right? Guys, there's trades that I've taken 1 to 10 where you know, I've been in trades, I'm looking for 300 pips and I'm only risking 20, 30 pips. So I want y'all to understand the higher the risk to reward ratio, right, the better. Because again, guys, think about it like this. If you took a trade and you were looking to gain $100 and you only risked $10, you could have got that trade wrong 9 times in a row, got it right on the 10th time and still been profitable. I want you guys to understand something, right? You don't have to be a 90% trader to be profitable. You don't. You don't even have to be a 50% trader to be profitable. You can win 4 out of 10 trades and still be profitable just using proper risk to reward. So I want you guys to understand that. And I'm not saying that the goal is to shoot to only be a 40% trader or a 30% trader, but I'm just trying to let you guys understand the power of risk management and how you can utilize this as a tool to be a very successful trader, right? So like I said before, you never want to over leverage on one trade. That's just it. Never over leverage. Risk can always be predetermined, guys. Risk can be predetermined, but reward is unpredictable. Right? You may only be risking $10 on a trade and end up making 500. I want you guys to understand, right? So this is how it works, right? So risk management, guys, I cannot stress that aspect of enough. You need to screenshot it, do whatever, right? Boom. So confirmation checklist. Now this is going to be like kind of one of the bread and butters of, you know, your trading system, your trading plan, right? So guys, you want to figure out what are the things that I'm going to look for before I get into my trades, right? So this is just some examples of things I look for. Areas of liquidity, equal highs and equal lows, institutional candlesticks. Or I'm always looking to predetermine my stop loss and take profit. 50% and above retracement on a Fibonacci, right? Predefining my trade parameters. It's a part of confirmation checklist, right? Boom. I'm always looking for at least a 3 to 1 reward to risk, no less, or 1 to 3 risk reward, however you want to say it, right? I always have to look at higher time frame. These are just certain things I have set for myself. And I have rules that I set for myself. I never trade while being too comfortable. I'm never going to rush into trades off of impulse. I always need to have a level of peace before trading. I'm not looking to take any more than 10 trades a week, right, guys? I don't want to be too comfortable while I'm trading, right? And when I say comfort, I don't mean comfort as in like I don't want to be comfortable trading. Like once you develop a system, you'll get comfortable trading. But I mean like I'm not going to be half asleep and trying to look at the charts while I'm half asleep. It may not go that well for you, right? You're not alert. You're not aware of what's going on. You're not looking at the charts properly. I don't trade off of impulse, right? You don't want to make impulse decisions in this. This is not gambling, right? You do not want to trade off of impulse. I always need a level of peace before trading. Like I said, guys, the mental, right? I need to be in the right mind state. And then no more than 10 trades a week, right? Again, a good trader knows when not to trade. I know traders, I am educators that literally have said that they trade for 3 hours a week and are making full-time incomes, right? So I want you guys to understand that sometimes less is more, right? Taking your time to really figure out 3 or 4 really, really good setups for the week is better than rushing into 20 trades that you just rushed, right? So I want you guys to understand that. Set, you know, some limits for yourself in terms of trading, right? Know when not to trade. And then the top 10 rules of trading. So never let a winner turn into a loser, right? If you're up $100, don't stay in a trade so long trying to be greedy that now you only walk away with 20 or now you walk away with negative 15, negative $2, like some nonsense, right? It's happened to me before, guys, right? Logic wins, impulse kills. Never risk more than 2 to 5% per trade. Trigger fundamentally, enter and exit technically. As you go through this, you'll see how news plays a role in this, right? Always pair the strong with the weak. right? So again, if the United States is going through a recession and Canada is their economy is elevating, right? That's a pair you maybe should look into, right? Being right but being early simply means you're wrong. Guys, trading is just a transfer of wealth from the impatient to the patient, right? You want to be as patient as possible, right? Patience is key. Know the difference between scaling in and adding to a loser. Guys, if you're losing out on a trade, don't and it's pulling back and you're like, all right, no, it's pulling back. I'm going to drop 3 more lots on this because it's pulling back. I'm negative $400, but it's okay because it's going to go positive on the pullback. I'm going to catch it even higher up. Now you got 2 trades open, 2 different positions open, and you're losing mad money now, right? It doesn't really make sense. So know the difference between scaling in and adding to loser. I only drop more positions when one of my trades is already in profit, right? And it gives a pullback and I'm still in profit on the pullback, right? Never let fear and doubt hold you back from getting into trades. Risk can be predetermined, but reward is unpredictable. And guys, this is the biggest one of all. No excuses ever. Like, and this is not just in trading, that's in anything that you do. I hear so many people who be just making excuses about why this is happening with this, why this is happening with that, why they didn't trade this week, and just BS, right? Like, honestly, guys, I want you to understand. Your excuses literally only sound good to you. Nobody cares. The foreign exchange market does not care that you made an excuse for why you didn't follow your trading plan, right? Like, I'm just letting you guys know that. So don't make excuses, find solutions. So, boom, boom, boom. Give me 1 second. All right. Give me 1 second, family. I'm about to open up the charts right this second. Bet. All right. Like, this kind of bet. All right, so guys, I'm gonna mark up a clear chart, and I kind of want this to be more of like a Q&A, but I'm gonna show you guys a very, very like simple strategy. I'm gonna do this on a pair I don't usually mark up. I'm gonna show you guys a very, very simple strategy, right? Something super, super simple that has been a tremendous help to me in my trading journey. It's a method that I like to call. So guys, when you're marking up a chart, there's a few things that I always look for. Like, now you guys can see as clear as day. You're looking at this from daily time frame. You can see that this is currently, even though like, it's kind of going down, right? This is currently pretty much on the uptrend. Like, this is what we see. Like, it hit this level. This was a reversal point. As you guys can see, major, resistance here. It hit this level, Euro JPY. You can see it's currently moving on the uptrend, right? Like, I'm looking at this off a daily time frame. The market has literally shot up over 1,000 pips. This is an uptrend right now, right? All right, boom. I identified that. So I know that right now I may be looking for buying opportunities. But one thing I'm going to do is, again, guys, I'm going to mark up major areas, right? I'm looking at areas where resistance is formed, where support was formed. And I don't go too crazy, guys. Like, when I personally mark up my charts anymore, I'm going to be honest with y'all, because I'm marking my charts off of the quarters theory, but that's something that you guys will learn later down the line. For now, this is fine, right? Just identify major areas. Now, I don't do too many markups, right? Because I pretty much know what I'm looking for. I don't do too much though, right? Sometimes like a really crowded chart is just is a little too much. So again, guys, you can change the colors for the time frames that you're kind of looking into. Right. Again, I want to do major areas. What areas did maybe support and resistance hit multiple times, right? Like, I see resistance formed here, right? I see resistance got formed here, right? In this area, I see here form resistance. I even see that it came back and formed support in that area, right? So I understand that this is a key point. I'm looking at it, but let me show you guys how break and retest would have played into this, right? So I'm looking from the 4-hour time frame right now, guys, right? And what I want you to understand is this: any area, right, that resistance was broken or support was broken, usually market is going to come back to that area just to kind of confirm the current trend, right? It's going to come back to that area to confirm the current trend, right? So I see that resistance is formed here. I see that resistance is formed here, right? I see that even here was slightly rejected, but what happens? Resistance gets broke, right? Resistance was broke. And what do I look for, right? See, a lot of people, we see resistance break, and then you got people that's entering in. You got people that's entering right here. You got people that was maybe entering here. And what kind of happens? Like, imagine the person who entered right here. See, now you got brought in this point where you got brought in orders drawdown. You ended up getting stopped out the trade. You ended up closing it out. Something happened. But what's kind of like a surefire way, right? Like, guys, remember when I was saying that trading is just a transfer of wealth from the impatient to the patient? What happens? See, resistance is formed, but then what does the market do? The market literally goes and it works its way back towards this resistance, and that will form support. And this is a break and retest, guys. I want you to understand that break and retest is super simple. Like, it's super, super simple. Break and retest. I can't stress to you guys how simple like break and retest actually is. Super simple, right? Boom, resistance, right? Resistance. It forms in this area twice. Resistance is now broke. It comes down into this area, right? Support. What time is it? All right. It comes into this area, rejects. This is an opportunity to enter, right? The market moves up. The market literally even made its way back into this area. This is another opportunity to enter. Why is that, guys? Wherever the market buys, it must sell. Wherever the market sells, it must buy. That's just what it is. This upwards push, right? It broke over this resistance. Aside from breaking over resistance, it caused imbalance, but that's something for another day. But it broke over resistance, went through it. The market literally just skyrocketed up in this area, right? The market is retesting this resistance, filling, the area because it has to sell where it buys, right? So you get the break and retest, you can enter. Super simple, right? This is a super simple setup. Super, super simple, guys. I can't stress how simple the break and the retest is. All I want to see is a few confirmations. Like, if I'm seeing resistance form and then the market goes and breaks above resistance, and now I'm getting wicks. As you guys can see, you see the market wicking out of this area. That's showing me that the market is now showing signs of exhaustion, right? The market is showing that the selling in the market may be coming to a stop, right? I see that, again, this is an area where the break and retest can happen. I see this wick, right? This wick is just showing me that the selling strength in the market is not there. I use that as another confirmation. And then boom, now I'm in this trade, right? Because I seen the break and retest setup. Now, I'm going to show you guys some other examples of where this could kind of happen, right? So we're going to look at like AUD USD, for example. Right? So boom. We're going to talk about this right here, right? All of these areas, this is resistance. The market slightly moved past it, right? But we kind of see it. It's starting to wick in these areas, right? It's starting to wick out. It's starting to wick out, right? All of a sudden we had this. It's still moving up. We catch this wick out. Guys, this area, like I'm going to look at this entire zone right here, right? I see that it was nothing but resistance here, right? And I see that the market is kind of making its way back up. I seen the market broke this area. It starts pushing back down, and I'm going to watch this area, guys. This is break and retest. I'm going to watch this area to see what happens, right? And the market stayed in this area, accumulated price, right? It just literally accumulated price in this area, broke the resistance, break and retest setup, price accumulation, skyrocket, boom, right? I'm telling you guys, super simple. Like it can't get easier than this, right, guys? I'm letting you guys know that this is simple. That this is not something that needs to be pushed too much. This is super simple, right? So boom. Now, aside from this, right, break and retest. So I'm gonna show you guys a few more examples, right? And guys, if you're following along with me, let me know. If you're following along, let me know. Right? Drop a 777 in the chat if you are following along. Bet. All right. So guys, I'm gonna show you guys another example of break and retest, right? Now remember, we always want to identify major reversal areas, right? Wherever a major reversal area happens, what do I understand? I understand that in this area, it's a major reversal area, right? That something has to happen. So a major reversal area. So boom, this is what happens here, right? I see this point happening, right? I see that the market came here and it just tanked. You see that? Like if we count up the pips, right? How many pips is this? This is 262 pips, right? Boom. So I see that this happened in this area here, right? I see that this happened right here. I see that the market just skyrocketed up. And I understand that, again, guys, wherever the market buys, it must sell. So I understand at some point, the market has to kind of make its way back into this area. And aside from that, what do I see? I look left. Whenever you're trading, guys, I give you a major gem. Always look left. When you're trading, the market repeats itself constantly. So you always want to look left, right? So boom, this happens. We look left, right? Resistance, major resistance happens in this area, right? Now, it makes its way up, it breaks this. What happens? It comes right back into this area, retests, right? Literally retested this area. That's an opportunity for you to get in, right? That was another opportunity. So let's say you missed this initial opportunity here, you have another opportunity here. Or let's say even if you got in and you wanted to open up another position on the trade, you have the option right here. And let me show you guys something that's really crazy how this lines up. Let's say we pull a fib, right? Let's say we pull this fib. I bet this is somewhere around the 61. This is like near that, going into that 61%. I know how Jay be talking about that golden ratio area, right? Between the 50 and the 61. It just dropped right in that area. And that's just break and retest. Boom. Look at that. Right? Super simple. It's a simple setup. You could have took this. It's that golden area, right? That Jay be talking about a lot. This is that break and retest setup. You got multiple confirmations on this trade. I take this trade, you could still be in this. You could have held this that whole time. And even if you would have got out right here, even if you would have, got out, let's say here or here, hey, let's count the pips. All right, boom, you get in here, it's 100 plus pips. Here, 160 pips. Here, almost 200 pips. Right, guys, this is simple. Like, I want you guys to understand, like, it's not that hard. You just gotta be patient. Like, the biggest thing about the break and retest is that you have to be patient. You always want to look for the wicks rejecting off of the retest area because you want to look for the signs of exhaustion, right? That's confirming that the trend is going to go back in that direction of the break and retest, right? But it's just a few confirmation, guys, and you can line the fib up with this. This is what Jay does. Literally, he just lines his fib up with the break and retest, right? And it's mad simple. Y'all be seeing how them trades be hitting that he be dropping, right? Break and retest. I want you guys to understand. So this is a super simple method that you can utilize. And as you guys continue to expand, you can, like, I collab this with other things. Like, I use kind of smart money, but I tie my break and retest stuff into smart money. Talks about imbalance, right? So I would have not only identified that it was the, rejecting of this area, but I would also identify that there was imbalance in this area, right? Which means that, there's something that happened there. Price is going to go back to that area. It's going to be attracted back to that imbalance, that liquidity and all that. But that's something else for another day. I want to keep it simple. But guys, this is mad simple. Like, I want you to understand, this is how I started trading. Break and retest. Like, it's not that hard. It's super, super simple because it's simplicity. And guys, I want you to understand there's simplicity in everything that we do in this business. Like, this is not the type of business where, like, it has to be overcomplicated. Trading doesn't have to be overcomplicated, right? When you figure out the system that works for you, it makes it so much easier. Right, guys? So everyone, I'm going to leave you guys at that, right? And I appreciate you all for getting on this call. I hope you guys got some gems, right? If you have learned and took something from this call, go inside the BPO Worldwide chat. And I just want everybody to drop what you took from this call, right? What value you got out of this call, what information that you learned, family, right? So look, let's keep running it up, y'all. I appreciate you guys for getting on here. Guys, one thing I say is this. the more trainings you get on, the better you will get. Make sure that you are tuning in each and every single day. Like, make it like your mission to tune in to these trainings, right? Because I understood something. The more I started reading, I started getting better. The more I started watching personal development, I started getting better. The more I tuned into trainings, I started getting better. You want to position yourself to win, right? And you're going to be positioning yourself to win every time you get on these trainings. So let's keep plugging in, family. It's another training at 9 p.m. with Kai. He's going to absolutely crush that training tonight at 9. There's a training with Donya at 8 p.m. Get on those trainings, guys. Plug in. Tune in. Let's keep running up. I'm running up this webinar at 7 p.m. family. So let's run that webinar up 7 p.m. Most likely I'm gonna drop this recording in the BPO trainings recording chat. Let's run it up, family. Love y'all. Thank y'all for plugging in again, fam. And we are out. Peace.